Hello everyone, welcome back to another week of markup discussions. Hope you've all had a good week.
So this week we're reviewing your markups. You sent in from Tuesday to talk about any improvements that you can make. We also want to do this so that we can learn from each other's understanding.
Exactly. So, just to give you guys an overview of the price delivery that we will be going over. So, some of you may remember that I sent this in on Tuesday. And what we wanted you guys to do was essentially take this price delivery and mark it up and give us your understanding of what you're seeing over this full duration. So just quickly, for those that haven't seen this, what we can see is that we have a sideways price delivery. So we have a range, we have initiation out of that range, shown here by the BOS. We have a return into that range to mitigate, and we have a continuation. So we have range, initiation, mitigation, and then continuation to higher prices. So starting with the first person that sent in a markup. So the way we're going to be reviewing this is marking, letting you guys know what we think is good and then how you can improve. So let's get started. So noting the good points on this markup, really good observation here from a mitigation perspective. So as we can see, here we have that OB being created and that move away and that return into the OB. So great observation in terms of following the mitigations and the initiation of the BFIs. And the second thing we want to mention here is the trade selection. So again, great trade selection, great selection of the OB, great stop loss, right back in, essentially that move back into the origin of the move, playing 50% of that OB with your stop just underneath. So great 1 pip stop. Yeah, great trade. So now going into the improvements.
So improvements that we wanted to talk about was how you're drawing liquidity. So how we see liquidity is equal any high, any low is liquidity. When you get equal highs and equal lows stacked together, that's obviously increased liquidity. And then the other one that we look at is that diagonal liquidity, where there's lots of highs and lows stacked together. So if you have a look at this this one here, where we've got one line drawing the whole way through for liquidity. The actual liquidity is just these highs and lows that are underneath here that Chuck's just drawn on there now. They're your liquidity points. So we see price move back into these liquidity points and take that liquidity. And then after it's taken that liquidity, it's paused for a duration of a time, and then it's created more liquidity to continue lower. Obviously, because the price doesn't just move on thin air, it's moving on this liquidity. So that was the first improvement there.
So that was, just to be specific on that, it's how you're drawing your liquidity. So within here, we see, essentially we want to be looking at highs and lows that are stacked together from a liquidity perspective. So in here, we always want to just train our eyes where that is happening, because essentially that's where we're seeing a lot of liquidity being stacked. As you can see, price runs through here pretty aggressively. So the feedback here is when you are drawing your liquidity points, be more accurate. So here is where we want to draw liquidity. Here is where we want to draw liquidity. Here is where we want to draw liquidity. We don't want to do this because we're not training our eyes to see anything specific here. This turns into a trend line that is essentially trying to represent something that is only happening in here and in here. So I hope that's clear. Just more accuracy in your liquidity. So like for instance, this one up here we just want to be marking something that looks like this, so the liquidity versus doing something that looks like this. And there's no real fault here, but it's just trying to be more accurate with your technical skills. And then the last one, do you want to talk about that? The momentum
shift? So the momentum shift at the top. We want to figure out why there's been a momentum shift at the top here as well, which is important. So how we do that is we use our time frames, go back to the higher time frame to look at where prices reacted from and why we've had a momentum shift here.
Exactly. And obviously we want to mark up our momentum shifts, our reversal structures, again, for the purpose of training our subconscious. We want to be able to see these things in the moment. So, when we're seeing this type of reversal like this, let's mark it up. Let's understand what is our A, B, C, D, and how that full picture is printing. But yeah, so just something to mark up on there. And again, you may have seen it, you may have not, but again, we just want to be as accurate as possible and as detailed as possible when we're marking up our charts, especially when you're sending them in to us, because again, it's showing us what you've seen and versus what you may have not seen.
Exactly. So yeah, very good markup. Very good markup there as well.
Overall, good. Again, great trade selection in here. So next one is this one here. So good points wanted to mention on here is, first of all, just noting here that how you've understood this move from this, as you've got here, 3-minute OB into this OB price delivery down here, this sell to buy. So here you can quite clearly see how you're essentially marking the range. So from mitigation to mitigation, and then we're seeing price hold inside these two OBs. So yeah, so that's good observation. The next one is again trade selection. So here we've seen that you've taken your OBs from multiple time frames, which is great. I think over time you'll learn that you don't necessarily need to be looking at all of these time frames to see this price delivery, but as long as your eyes are seeing what you need to, then it's fine. So once again, great trade selection here from inside this OB price delivery, and then points to improve on.
Yeah, again, liquidity. This is another person that's drawn their liquidity with one long trend line instead of looking at the stacked highs and lows, which is just a small improvement, but overall you're seeing the right thing. And again, drawing up your liquidity down here, just drawing the line, drawing up your liquidity down here and above on here and here, just so that you can see, just so it gives you more understanding of what cause is being created for future prices and for the actual move that's happened as well.
Exactly. And then inefficiency. So we've noticed here that you've marked that this here is a fill of inefficiency after we've essentially had that price being contained, that initiation out of that. Well, how do you do that?
No idea.
Sorry guys. Let me use this one because it's a bit smaller now. Oh, it's big as well. Well, let's go back to this one. Sorry about that. Yeah, so going back, so start again. So yeah, we noticed that you've had this fill of inefficiency here. So price moved above these highs here, creating that inefficient pricing, and pulls back to make price efficient. I think in here, and sorry, to add to that as well, and then you've got your selection of your OB. So I wouldn't, this is definitely a fill of inefficiency, but it's not something I would mark on, because I think for me, the more substantial or more significant thing that I'm seeing here is this price delivery between these two candles. Now, it may be hard to see, and another thing as well, I'm not sure how you've marked your OB here, but essentially we want this OB to be from...
Yeah, from where it actually starts. So make sure you're drawing your OBs from the actual candle that you're using, just so it helps us to identify which one you're talking about.
Yes. What buttons did you press to... Do you remember?
No, just the pad. Oh yeah, cool. Hold on. There you go.
Oh, it was that. Oh, perfect. So we can get a smaller line. Yeah, so this is essentially our full OB. So from this black candle high to this blue candle low. So you notice how this creates our OB, and this is what price moves into to mitigate a move away from. So sideways price delivery, initiation, mitigation, and then continuation for higher prices. So yeah, just a better selection of the OB here. See, get this more accurate. And this fill of inefficiency, again, great observation. Whether you choose to mark it on or not, I think is purely down to you. But there's not much need here. But yeah, this is all inefficient pricing. But overall, again, another great a great look on how you guys are understanding and seeing the markets. Overall, just be more detailed. Don't be afraid to mark up every single move that you're seeing in here. So every range, move, range, move, range, move. Don't be afraid to kind of dive into that and understand it in great detail. So next one is here. So do you want to start with the good points, Burton?
Yeah, so good points in here were just the understanding of the weak highs. Hold on a second. Yeah, so understanding of the weak highs. Obviously, slow change of direction. We haven't broken any significant structure, meaning that these both highs are just becoming liquidity for a future point, which obviously we see the first one was run for higher prices, and the second one, again, run for higher prices. These were just, obviously that momentum shift at the top was just to pull back in to mitigate this here and create more liquidity to move higher, which obviously then just got run. So good observation of the weak highs.
Yes. Next one is trade execution. So yeah, great observation in here. We're seeing that we're seeing range, initiation, mitigation, small range again, seeing that initiation and then that mitigation. So as we can see, that Burton actually marked us up pretty well during the week and saying that any entry back into this zone is essentially an opportunity to get long here based on following these mitigations that are happening. So for you to see this and take the trade from this point, again, good observation. We have cause for higher prices that you've noted. So when you're getting in here, you have reason for that higher prices, especially that we've come from a momentum shift that's lower, and then we're seeing price continue to higher prices. So again, different to what we've seen, but in our opinion, this is a great execution. Your stop is in a really, really good place to be protected. And overall, obviously you caught it to the top of these highs. So yeah, good execution. And then points for improvement. Once again, it's just a bit different, but just to highlight the accuracy of the liquidity that we're marking. So we notice here that you're marking liquidity through candles. So this isn't the end. It's not the end of the world to do these types of things, but we just want to be more accurate in how we're marking our liquidity points. We have to really think that we're training our minds each time we're marking up. We're training our subconscious each time we're marking up. We're training our understanding each time we're marking up. It's all really key. So anything you do on the charts is holds quite a significance for long-term growth and for growth over time. Not any specific feedback about specific marking up, but we do want to be just more accurate in what we do. So over here, just being sure that you're using the top of the candles, here is great. But again, we don't want to mark up past this line. Let's just keep it focused on the areas that we're actually looking here, because again, you're seeing how price moves through these areas of stacked liquidity. And this is what we want to train our eyes about. Yes, so hopefully that's clear. And then the next one was cause. Do you want me to take this, or you wanna?
Yeah, so I was gonna say, so the cause for this week high was obviously to run at a later stage, and obviously we've not got the reaction that's left. So anytime we do get price stopping at a certain area, we always want to go back to them higher time frames again and just look at where price has stopped and why it stopped there. This is going to give us help us to build more of our narrative. Exactly. That was the only one from that one.
Yeah, exactly. And from the trade that I took, you would see how understanding this, the fact that one, we have a 1 minute momentum shift, and two, what's caused that momentum shift can lead to taking trades. This is significant. We want to understand the why and the cause behind a price move, especially when we're seeing a momentum shift. So hope that's clear. So yeah, here's cause for lower prices and cause for higher prices. We understand why. I'm sure you understand why, in terms of this didn't create anything significant for us to believe that this is a strong high. But then the other side of this is the cause for why we had a momentum shift here, and caused lower prices. And we want to be looking back in the chart to see if there's anything of significance that we need to pay attention to that can give us confidence behind seeing lower prices after this momentum shift. Yeah, so I hope that's clear. And then the last one, yes. So go on, Bert, and you can.
Yeah, cool. So I was going to say on this one here, going into OB selection, obviously this bottom OB selection here was just perfect. But we're looking at this one here within the middle of the range. We want to always be trying to play the edge of the price range. So from this low to this high, this is our whole price range. We want to be looking at the edges to be taking our trades. Essentially, this trade is a trade that we could have taken, but this just becomes a reaction point to create more liquidity after this liquidity here is taken on the left. So that liquidity is taken here on the left. We get a reaction off this OB. We get no follow through, so we know that this is not a strong low. So this again just becomes liquidity, and this is just to create more liquidity here to move lower, and obviously create those set of equal lows to then continue lower from that one.
Yeah, so I hope that's clear. So essentially, here's a trade that you can play, but understand that you're currently on the wrong side of this momentum shift. So it's it's quite clear as to why we price held this range in here and continued lower. Obviously here you may have been able to get out at break even or a slight profit, but overall good trade selection. But understand here that you are essentially trading the wrong side. Again, these are trades that you can take, but it's not something we would look to take personally. But again, something to learn from. And yes.
Yeah, I was just going to talk about stop sizes as well. Like me and Chucks both don't like going over 2 pip stops. That's just our personal preference, just because we know that we can get into trades that are, anything between 1 and 2 pips. So there's just no need to go over, and there'll always be more opportunities to get involved in the move as well. So we prefer to wait to get a smaller stop to get a larger risk to reward rather than taking a larger stop. But again, that's just our personal preference. If you guys want to take bigger stops, that's absolutely fine. It's all about the logic and understanding how you're reading price rather than your individual take profits and stop sizes. That's all up to you and your personalities.
And you will see that stop sizes are they tend you can have larger stop sizes, and sometimes, I rarely do it, to be fair, because I'd rather wait for the reaction and get into a continuation. But if you are taking larger stops, right, have them at swing points. So where we're looking to see, higher time frame reversals. So then you might have, 4 or 5, maybe 6 pip stop, but you're aiming for a swing reversal here. So, you're looking for, 20, 30, 40 pip move, because then you're getting good R. But when when we're catching 10 pips, 20 pips, and you've got a 6 pip RR, you're essentially chopping a lot of gain that you can get. If we're keeping a 1 to 2 pip stop and catching 10 pips or 20 pips, we're still getting quite a large and high RR just based off of just the stop size alone. So I think at first you can have a large stop, but I think the goal here is to gain an understanding where you can refine your stop over time to get it smaller and smaller. There's trades out here you can take for less than a pip that can be highly accurate. So just understand that that's possible and work to get smaller stops. What's the other bits on this one?
Yeah, so obviously we mentioned this before, but just again, OBs that have a reaction but don't cause any breaker structure follow through just become liquidity, as we see on this chart here. So this larger OB that we have in the middle here, we got a reaction, which means that this obviously isn't OB, but this was just the cause of this was just to create future liquidity to move lower and to mitigate out of the position which was higher. So as we see, OBs working together here as well.
Exactly. And then just understanding that this is the structure you're playing here is not higher time frame structure. So if we was going to mark this high and this low, the low is down here and the high is up here. This move here is just a move within this move. So this selling after what you've marked as this liquidity grab, this sell and this move into lower prices is still part of this up move. So I can see why you might have taken this trade here, thinking that this is the edge of the range, but it's actually down here that is the edge of the range. And just go to a higher time frame to see that.
Yeah, this is a this also price delivery here as well, where we get this move up, we get the pullback here. This is a ideal price delivery for future liquidity. So you'll notice that this happens quite a lot, where we get the move up from the OB, we create liquidity for the future, and then we continue higher, and that's part of a price delivery of EU that we see quite a lot.
Exactly, building cores and building essentially having liquidity there ready to be run to support a mitigation. So again, ideal price delivery. I hope that's clear, guys. We're not able to draw on this one, as you probably wonder why we're not, but that's the reason. But yeah, hope that's clear. If it's not, then just send us a timestamp and the question you have, and we can come back to you. So yeah, so that covers everyone's trade. Sorry, not trade, but markups. So overall, guys, again, this is what we're looking at here. I hope you guys can see that there's multiple trades in here. Yes, they don't all run for high RRs, but just think about the entry, techniques that we're using to get into the market and what we're looking at. I think this is a great bit of price action to see how, how you can essentially attack something that looks like this. So just quickly going over these people's trades again. And then what we wanted to do next was essentially go through our personal markups and then cover some overall improvements that we think that can be made that will help you on this price delivery, but also covering some of the questions that we've received over the week. So first of all, Burton's going to go through his.
Cool. So the first thing in this is just how detailed it is. I've really tried to mark out everything that I can see. I mean, even this detail here, we could have gone into more detail, but obviously just to keep it a bit cleaner, we didn't go into too much. But just be as detailed as you possibly can with all your markups. It's going to help us to understand what you're seeing and why you're seeing that, so then we can give you more tailored feedback, essentially. But looking at this overall detailed markup here, first things first is I left my stop open on this trade, which I don't normally do. But I saw this OB at the bottom, so I was happy to just leave my stop open at 1% risk, just to see if we get a reaction and a follow through. Just because of this price delivery was that range, initiation, mitigation, and continuation. And where I entered my stop, I would have got taken out of break even if I did move my stop. So I just left mine open for 1% here and took that risk for obviously a bigger gain.
I think the key thing there as well is that I'm someone I'm quite confident. I'm really confident in how I read the market. So for me, leaving my stop loss open is pretty easy. But it is clear that not everyone feels that way. So I think this was a great observation from Burton. I remember him telling me this. So the fact that we have an OB at entry, it's given him confidence to understand why price would want to return here and move away. So this pullback and understanding how price was delivered, again, is given even more confidence for him to see what's happening. So I think it's a really, really key point. Don't be afraid to have stop losses open. Right, the key thing here is understanding what's going on. And it's, again, great observation by Burton.
So I was going to say as well, obviously this is something that we covered in the other ones as well, but just the origin of the move, which is exactly where price came back to tap before it continued. This is exactly where we want to be looking for our trades, the origin of the move, just because this is the absolute lowest point, the cheapest point in this price range from the high to the low, which is obviously, again, the best place to be entering. So again, just more reason why I'd want to leave my stop open, and my stop loss was underneath the the OB that was played as well, which means that stop should be protected by the BFIs. It shouldn't come any lower than that. So again, just more confidence.
Exactly.
The other thing I wanted to talk about on this one as well is this here, containing price. So when the BFIs are containing price, you're going to see an OB on the bottom and you're going to see an OB on the top, and they're going to continue to create liquidity within this high and this low. So this price range I took the trade in, from this high to this low that Chucks was drawn on, this is the absolute cheapest part of the range, which is anywhere in the bottom part here, which is a very, very good place to buy. So any of these reactions here, any of these rejections are all opportunities to take a buy, because they're at such a low point in this price range, such a cheap price in this, such a cheap point in this price range. And again, this point at the top here, just highlight this one. So this is an OB where you've got a sideways price delivery, initiation, again, sideways price delivery, initiation, mitigation, and continuation. But again, we never broke this swing low within this range. So we know that now the BFIs are just containing the price within this price range. And again, we see that happen again here. So draw this one in. So again, we got an OB at the top here. Let's do it different. Yeah, you got it. So we've got OB at the top there, and we've got an OB at the bottom. Draw that one in, yeah. And again, they've just rejected at the OB, so obviously mitigated out their positions, but not broken the structure high, which is obviously to create future liquidity to then run through. So when we see an OB at the top and the bottom, this is normally just indicating a price range. Well, we're going to enter into a price range. But yeah.
I hope that's clear. And then just one thing I want to say on that. So the key thing here, guys, is that when we're looking at a range, all we're looking for is that, right? Because now we have a high and we have our low, right? So when price is in between here, we understand price is being contained. When price breaks out of that, that's essentially our initiation and our cause for something to happen. So this could be a higher time frame mitigation for higher prices, or this could be the BOS for move for lower prices. So with the full picture, we understand why that's happening. And here we see price comes down, comes up. So look, we have low, we have a high, we have our contained price action. Over here, we have our right here, we have our price delivery for that range, and we see the range being contained.
And it's just stacking in these points here, the same as what Chucks is drawing on the screen right now. These are just stacking liquidity to move higher, and obviously we've got liquidity there to move lower, which obviously got run as well.
Stacking orders.
Exactly. Two things: it's stacking orders and it's creating liquidity to move. Both of the things of a price range.
Exactly. So as we know, BFI love ranges because that's where they're initiating their positions. So was that all of yours?
Yeah, it's everything.
Cool. So yeah, this was Burton's trade. Again, great trade. We've had a trade from here, we've had a trade from here, we've had trades from here. So just showing you again that there's multiple trades in here. So I'm going to showcase that again in my trade, which is here. So for me, I wanted to highlight, understanding the full picture. So, I wasn't involved in anything, left from my entry here. Just to quickly note that this was not Burton's trade. I actually made an error here. For some reason I had thought he took it here, but he actually had taken it back here. But regardless, very similar entries. So this was my trade here. So I just wanted to highlight the full picture. So here we can see that we have a move cause for higher prices. Those higher prices get delivered. We get a higher time frame OB being printed, and then mitigation move away. So here we have that cause for higher prices, and we see higher prices, price delivery come into the market. So then from that point, we get this momentum shift at higher prices. So what do we see, right? We see that momentum shift happen. Sorry guys, it's getting a call. So we see that momentum shift happen, right? And then that move away. So when I'm looking at this, I'm saying to myself, well, why is this 1 minute momentum shift has happened? What has caused this? So I'm looking left, And if you do look left, you will soon see what we react off. So for me, that was me gaining an understanding of the full picture. So this 1 minute price delivery with the higher time frame cause that created this momentum shift. So once I understood that, I'm seeing the break of structure, I'm seeing the full momentum shift come in, and then I'm seeing this sideways range. So for me, I think I tend to focus on trading and placing a trade when I'm watching and actually observing the chart. So I don't sit at my chart all day, but when I am at my chart, I am looking to place a trade. Obviously, again, this comes with experience, in terms of what I want to look for. So for me, following price delivery is key, and that's essentially what I'm doing here. So I've seen the break of structure. I've seen this move happen here. So we have this low that gets held. So now we have a range, right? High, highs and the lows. And price is run this low and now moved up into higher prices and then breaks the low. So what do we have here? Simple buy, your buy to sell price delivery that is creating essentially our range and an OB that I'm interested in playing. So I was around the charts at I'm pretty sure about here. I've seen this happen. I'm understanding what's happened, that we're causing a run to lower prices down here. So I'm looking to catch a trade into that OB. Why is this a good trade, right? Well, we're highly likely to come back down here. We already know that this is a likely scenario, and this is me taking that full picture and the understanding of following price delivery and taking an opportunity that is being presented to me at this time.
I was going to say another reason why this is a good trade is because we don't know if this OB at the bottom is going to hold. This could just become a reaction to create more liquidity to then take out all the liquidity that's stacked underneath these lows. So we don't know if that's going to get run or not. So even though we got a reaction off this OB down at the low here, which was obviously my entry, we don't know whether that's going to hold or whether that's going to become that reversal. So that's why when you're seeing this momentum shift at the top, you're seeing bearish price delivery. There's no reason why you shouldn't be taking these, or at least looking to hedge, which is essentially exactly what we've done.
Exactly. So then that's essentially I took my entry within here. So again, different entry from what we have seen, but here we see the cause, right? Buy to sell price delivery, we see the intention, the break of structure, and then we see the return to origin, right? Return to the move for the mitigation, and then we see continuation in lower prices. So really, really key. What else do I want to mention?
These continuations as well are just perfect. These are exactly what we want to look for when we get a momentum shift at a higher time frame point of interest, and then we get some price delivery showing that the BFIs are initiating their orders for lower prices. This is exactly what we want to see as well.
So it's something we see over and over. You guys have probably seen it now, but over and over again, and it's the skill here is it's not that no one's able to see this trade or see what's happening here, but it's the skill is gaining it and understanding over time, so you're able to see it in the moment as it's delivering. This is me essentially trading the full picture, right? Higher time frame from this perspective, lower time frame from this perspective, and then following that continuation of that price delivery, following the intention of lower prices after this cause that was created. And again, momentum shift, I was saying to Burton, the amount of courses that we've taken in the past and we've received some sort of PDF or some sort of, something that we need to maybe print out and go over. And then we would not see any of that repeated in the market, or rarely see it repeated in the market. But, we've released something and you're going to see these things repeat themselves every single time, every day, every minute, every hour, across every time frame, these things repeat themselves. It's not rocket science, but it's the skill to be able to read this price delivery in the moment. And it's great that we're able to release something that is giving you guys an opportunity to see these things as well. So again, clear momentum shift that's happening here. We've got this leg, impulse correction, impulse that move above a previous high, and then we see a reaction away. So, perfect reversal. Of course, you know, in another situation, we'll be looking for price to come up here to then take that continuation. But we know what happens down here. This is a reaction from essentially a higher time frame OB that's been created, and then we're seeing that move away. So now, you know, we need to be a bit more careful about taking any reversal trades that are heading into here. And don't forget, we are following the higher time frame here, right? In terms of the higher time frame is bullish, and we're following that bullish price delivery. So these are reasons why you wouldn't look to take a trade in here. And of course, this becomes a weak high. Yes, I hope that was clear, guys. So yeah, do we talk about these overall? So next thing we want to talk about now is just overall improvements. I mean, we kind of covered them here.
Yeah, I mean, we did look at everyone's markups, and we just made like a list of overall improvements that we can make.
Yeah.
On everyone's markups. So understanding the why, which is obviously one of the most important things. Understanding why things are happening, why we're getting reactions here, why we're getting momentum shifts here, why prices reacted from this point, and just use your time frames and find out the answer. This understanding the why is how we've got to where we are. So it's an extremely important part of trading and building narratives and understanding the full picture. So it's just very, very important. If you don't understand what's happening, ask yourself why and go and find the answer to the question. That's where you're going to learn the most.
And this, you know, people will send us charts and ask us why this happened, and it's great. You know, we can then pull up our charts, we can have a look, and we can understand why. But that process of getting to that understanding is what you guys need to do, because then you will understand the process of understanding the why. You know, go through that process first, try and figure it out, then come to us and then ask us so we can confirm to you. It's important, right? The process of trade, you know, being able to execute a trade and get to that point when you can execute a trade is important. Building a narrative and gaining the full picture is what is going to breed confidence in your execution, right? Everyone can take a trade at no B, you know, it's pretty easy, but then being the confidence behind placing that trade, not everyone will have. And that is gained by the understanding of what's happening. So again, you hear us, you know, going about it time and time again, but building that narrative and understanding the full picture is important. And again, you know, we see you guys are improving as well. So let's talk about that as well. You know, there's some of you are constantly sending in charts, which is is good, but you know, obviously it adds a bit more of a workload onto us. But you know, from that alone, we can see that you guys are learning and gaining an understanding over time about that full picture of price delivery. And you know, you've been able to go on and catch some great trades. So yeah, again, well done for that. I think
I think like understanding logic and from our markups, you now understand the logic behind why price moves in a certain way, or where the BFIs are getting into the market, and we're seeing that through your markups. It's literally incredible for us to see that, to see you progressing to a certain stage. And it's only been 3 weeks, which is even better.
This is the fourth week, right?
Exactly.
Yeah. So next thing was, again, something we've already mentioned, but marking up in more detail, focusing on everything you can see. You know, this is how we're training our recognition, right? How we build recognition in the moment, right? The observation, the skill of observation, and being able to execute in the moment. You know, when we're rather marking up in the moment or marking up in hindsight, let's just, you know, force yourself to be as detailed as possible. It's not about the trade. The trade is second, right, or third. What we care about is the understanding of what's happening. So don't be afraid to mark up everything, right? And when we say everything, you know, we don't want you to have messy charts here. You shouldn't be trading with a messy chart. You should be trading with a clean chart. And it's the hindsight markup at the end of the day that should look, you know, more busier. So in here, you know, we have this OB. Don't be afraid to mark this up, right? And you should be marking this up. Why? Because look, we have a reaction. So this should definitely be something that's marking up. This here should be marked up. Why? Because we can see that this low did not go on to create anything, right? It didn't break any significant structure. So now we know this high is liquidity. It's worth marking up. Sideways price delivery, worth marking up, worth marking up. Why? Because when price comes back to these areas, we understand how price, we can see how price is moving and understand why price is moving in that way. How is it taking out liquidity? Aggressively, right? How is it pulling back? Or sorry, why is it pulling back? Right? Because of something over here. So by gaining that full picture and being detailed in your understanding, it is going to give you that leverage to understand future price and obviously build that understanding and confidence over time. Sorry, I feel like we're repeating ourselves here, but ultimately, it all does come back to understanding. So yeah, building a recognition is important. So let's try and work our way to be as detailed as possible.
So cool. So next one was accuracy in your drawing. So when you're sending us markups in of the OB that you're playing, just make sure you draw it on the actual candle so that we know, because some of the previous markups, just an example.
Yeah, this one.
So some of the previous markups were drawn and we didn't really understand which OB that you was playing. Obviously we understand it from our perspective, but we don't know if you're seeing the same thing. So obviously just make sure you're marking up the exact entry candle that you're playing or candles that you're playing. And drawing liquidity, make sure you're going from wick to wick and not drawing through any candles. We just want to, again, just be as accurate as possible. You're just training your eyes to be as accurate as possible for the future, essentially.
Exactly. Bottom. And again, it's something you're not going to do straight away, but again, it's something that you should be working towards. Because believe us, that it does make a difference. It is in the details, right? The skill set we're talking about here is in the details. This is how you're going to catch, these big moves. Well, I say big moves, but you can also catch small moves and still catch big and high RRs. So it's important. Holding trades and not closing them too early. Yeah.
So I was going to say, so holding trades, so there's been a lot of people that holding trades and take profit is your own personal preference. We're not going to tell you how to take profits. This is literally up to you. Whether you want to take 5-10% on a trade and you're happy with that, then that's fine. But if you are taking trades and you're cutting your profits, let's say at 5 or 6%, and that then goes on to make 20-30%, and you're getting frustrated or so on and so on, instead do the same thing that you normally do. So let's say your take profit you would normally take is maybe a 10-1, then take off 80% volume at 10-1 and just let the other 20% just run, just so that you can start to train yourself to hold trades for a little bit longer, and then you'll start to optimize your take profit in, and essentially just making more money from optimizing your profits.
And it makes difference. It does make a difference. An extra 2-3% is a potentially extra 20k, 30k, 40k. So it's
all dependent on how big your account size is.
Exactly.
Like, think about it now. If you've got a £10,000 account and that 2-3% is £200-300, well, what about when that's on a £1 million account and now that's 20-30k, 40k, 50k because you've held for a little bit longer? These are actual nice amount of sums that you would want to hold your trade for longer for. So get used to doing it now. But again, it's completely up to you guys. You don't have to. This is just following how we're trading and how we're deciding to look at the markets and why we hold for longer as well.
Exactly. So we've got different various ways to holding. So we can go from, we have multiple accounts. We partial everyone.